Futures trading is risky and can result in substantial financial loss. Good morning, good afternoon, good evening, traders from across the globe. Welcome to Short-Term Trading Live with Oscar's weekend webinar. This is the weekend webinar for April 5th, 2008. Traders, I have made a case to you over and over that I think that the problems in our economy have not been fixed yet, and that another shoe would drop soon, and that would be the banking sector. Now, I've done some homework, and I'm reading about the banking sector, and it looks like they're having a lot more trouble with borrowers who are defaulting on their homes than we know right now in the figures that are being released. With that in mind, I cut out some articles that I would like to just read some of the text in those articles to you. It is about the lenders and the fact that I think that shoe will be dropping soon. Listen to some of this news. This came out April 4th. Banks are so overwhelmed by U.S. housing crisis that they've started to look the other way when homeowners stop paying their mortgages. They're looking the other way. If you're not paying your mortgage, we'll pretend you are for a while until we get out of trouble, is what's beginning to happen. And there's reason for that. The number of borrowers at least 90 days late on their homes rose at the end of December to the highest in the last 5 years, according to Mortgage Bankers Association in Washington. The figure for the first time is almost double the 2% who have already been foreclosed on. So you have more than what we've already had foreclosures on, more than double, and they're in the wings. We have a bunch of homeowners that haven't even been shown on the charts yet. We haven't seen the figures because they haven't gone into foreclosure. We don't have a sense of the magnitude of what's really going on because the whole process is being delayed. Lenders who allow borrowers or owners to stay in their homes are distorting the record foreclosure rate and delaying the worst of the housing decline, said Mark Zondi, chief economist at Moody's. These borrowers will eventually push the number of delinquencies even higher and send more homes onto the already glutted home market. Then again, I'll read one more time. We don't have a sense of the magnitude of what's really going on because the whole process is being delayed, says Zondi. Looking at the data, we see the problems, but they are probably measurably greater than we think currently. Some people stay in their houses until someone comes to kick them out. Like the bank? Well, in a lot of cases now, no one comes to kick them out. It says it right in the paper. You are able now to just about default 90 days on your loan without even being contacted in a harsh way by your lender. They are allowing you to stay in your home so they don't have to show the figures to the world of just how many bad loans are on their banks, on their books. Traders, I think that the shoe will drop. I think bankers still need to go down. Now, there's been a whole lot of bullish talk on TV land. A lot of economists and analysts that I speak to are saying, look, it looks like there's a bottom coming in. Well, I'm going to show you some charts in a couple of moments, and I'm going to present to you my case technically, and I believe that in the charts, the fundamentals always come out first. I'm going to present a view to you technically why I say do not fall in love with the upside. Even if they can get this market to rally for the next few days and get it 50 or 60 points higher in the S&P, it is still going to be a short opportunity, in my technical opinion, which I'm going to show to you in these charts right now, traders. So take a look at the charts. Take a careful look because there's a lot to show you here. Stay tuned, traders. I'll be right back to you. Okay, traders. The first chart I'm going to show you is the Dow Jones Industrial Average Daily Bar Chart. This chart I presented to you a couple of days ago in a video, and I said take a look at how it makes these formations where it runs up, sideways slightly, and runs back down. Runs up, sideways slightly, and runs back down. Runs up again, sideways slightly, and runs back down. Just about each one of these had a little bit of a swing there at the top of it, but not every one of them. Again, it runs up, goes sideways, runs back down. Another chance it sticks its head up, runs sideways, and runs back down. And here we are, traders. We ran up, and we're sideways right now. you know what? I can't look at it any other way except for that it's likely going to run right back down. We're still in a bear market. This is what you get when you see this action in a bear market. Why wouldn't you think it's going to happen again? Even if you look back here, it runs up. It still runs sideways. It eventually cracks back down. It never runs away on the upside. Here again, another run up, a sideways consolidation, and a run back down. That is a characteristic of the S&P market, especially when you're in a bear. For that reason, I am going to stay in the bear camp until the market tells me otherwise. Now, we have an average we love to use at the OMNI Trading Academy. If you come down to our site, I'd be more than happy to share it with you if you grab a gold membership or higher. So come down to the site. Let me show you what these averages are. The next few charts, these averages are going to get very important. Look at this average right here. Whenever we get near this average, it's either runs up and takes off, comes down and tests it again, gets below and runs to the downside. Anytime we get near this average, the likelihood of a big move always takes place. Now, the interesting thing about this average is since the bear market started, we have been below the average. And we're just beginning to test it now, and it did not get above the last 3 days it touched it. And I think this average is going to hold us in check. Let me take you now to a few more charts which may very well drive home that point. Okay, traders, the next chart you are viewing before your eyes is the spot S&P, the SPY weekly chart. It's a bar chart, and this very same average that I showed you on the Dow Jones chart previous to this one is keeping this market in check, but look at how well it works. Let's start back here. The market's above it, stays above. Look what happens when the market gets below this average. A big plummet. Big. Comes up, tests it a couple of times. When it does get above, big rally. We rally for a long time, traders. This chart goes all the way back to the year 2000. We rally, we come down and touch the line. Rally up again. Now at this point, we're beginning to go into our bear market. The huge head and shoulders that you've seen on top of the S&P market from October into February when we finally broke. Well, take a look at it now. We get below the average and look at the break. And now we're down here testing around, and I do not think we are going back above that average. Look what happens when it's above it. It absolutely stays above it for years on end. When it gets below, well, take a look at this. It got below in October of 2001. It took until 2004 to get back above it again. When it gets below on the weekly, it stays below. Now let's look at the next chart. I think you'll see more about the way the market's acting around major averages, which seem to keep this market in check. Okay, traders, the next chart you are looking at is the Dow Jones weekly bar, the weekly Dow Jones cash market. And again, we are well below that very same average, traders. Look at us. We are below that average now. I think that we will stay below the average. If it tests the average, what should happen is, like you've seen here, watch this. When it was above, it hit the average and continued to go back above. Again, we go further. It's above, it tests the average and continues up. Again, the same sort of action. It happens over and over, traders. Look at this. Follow this along now. Now it gets here. The market happens to be below because we're looking back from 2000 all the way out to 2008. This is 2003. The market was below. It gets above, and look at what it does. Now that it's above, it stays above all of this time. Once it got below, it stayed below for a long time. Every time it tried to test it, once it was below, it failed each time miserably and dropped back down. So the point behind this is when you get below this average, you stay below for an extended period of time. And when you are above the average, you stay above it. Right now, we are well below that average. Another point in my case that this market has some weight on it and it should go lower. Let's look at another chart, traders. Traders, the next chart I'm going to present to you is the Dow Jones Industrials monthly bar chart. Now, I will show a chart after this that will illustrate how we are looking at something called an inverted head and shoulders on the S&P or Dow Jones daily bar. Traders, it is not completely formed. As you will soon see, there is a shoulder and a head, but the right shoulder is not fully formed. And I have shown this to many traders before at the Omni Trading Academy. Many times inverted head and shoulders do not work in a bearish market. You don't get the run up that you would have expected. In a bullish market, you do. That's on a daily. Now we have something even more interesting. This is a monthly chart. And if you recall, when we started to go into a bearish mode in the S&P, we had this huge head and shoulders in the S&P. It usually illustrates a topping pattern, especially as big as the one we had in the S&P, and we have been dropping ever since. Now, this is a monthly chart you're looking at, and look at this head and shoulders right here. Look at the head and shoulders pattern that you're looking at in the monthly. The daily put one in and broke down and topped out. The monthly now has a fully formed head and shoulders formation. Another case in point, this market is going to go lower. Yes, it could rally a little. Do not fall off with the upside when it does. We are very proactive traders. I'll tell you that right now at the Omni Trading Academy. If in fact this market turns bullish, we will be all over it. We're not going to stand there and watch. However, I am not the first guy to jump out there, and I will not be the first guy to jump out there and say everybody get long when you are in a bear market with these many indicators pointing towards the downside. If in fact we ever get so unlucky enough that this monthly gets below our proprietary average here at the Omni Trading Academy, we're in big trouble. It's got a long way to go just to test it like this time. If it comes down here to test it, we're talking hundreds and hundreds of points in the Dow. So downside is looking likely if you want to paint a technical picture. You've seen dailies, weeklies, and monthlies. Let's look forward. Okay, traders, the next chart I'm going to present to you is the daily Dow Jones cash bar chart. Now, of all the things I have found, all the indications on this chart I have found to show you that it might be bearish, like I had these circles on this chart before when I showed it to you, and how many times it puts in that same formation and then drops, even back here and here. Well, it's the same chart, but this is the case that a lot of traders and analysts at my site are bringing to me, and they're saying, Oscar, look at the head and shoulders right here. And I'm telling them the same thing. The shoulder's not fully formed on this side as it is on this side right here. Fully formed shoulder. Here, not a half-formed shoulder yet. And if it is a head and shoulders, if it is inverted, they don't work very well in a bearish market. So yes, this is a reason why traders are thinking it's going to go higher, but I don't think it's a fully formed formation, and you are below this famous average of ours that keeps these markets in check. Look right here. We are below that average right now. We have stayed below with 3 tests. We have not settled above. Same thing with the other charts that you've seen, traders. So right now we are in a very difficult area. The market doesn't know which way it's going to go. It's not sure if it wants to go up or down. And with that in mind, on Friday we decided, we have an old saying, if you don't know what to do, punt. Well, we didn't know what to do with the S&P, so we punted. And with that in mind, we went to this next chart I'm going to show you because we didn't trade the S&P Friday, and we traded the soybeans. Take a look at the soybean chart. Okay, traders, once again, when in doubt, punt. Well, we did. We went to the soybeans chart. Here is the soybeans chart. I recommended a purchase in the 1258 area on Friday. We traded down to around 1259 first. We all got long there. The market ran up. We got out at 1277. The high was only 1279. But the significance behind that trade was this. Ever since soybeans bounced off this average that we use at the Trading Academy, this is a different average, it has run up steadily. And now, very exciting is, it's just taking out this trend line that goes all the way from the highs. It settled above the trend line, so it is now above it. If it can take out that average sitting here, I think we have a big spike coming. This to me looks like a market that was very bullish, took a bit of a breather, and now wants to go back up again for new highs. That is likely what you get when you get a market that ran up like the soybeans did. Do we know that's going to happen for sure? Well, nobody knows that for sure. No one ever knows for sure if a piece of technical analysis is going to work out after you've done your homework. However, we are above this average, and that is enough to make me want to be a buyer again on Monday. Traders, I have another chart to show you, but if you don't know what you want to do and you're indecisive, as is the S&P market right now, and you'd like to trade an alternative, make sure you come to the site. It's www.livewithoscar.com, and let me give you the rec that we will have here for the soybeans on Monday. Now let's look at another soybean chart. Okay, traders, what you are looking at now is a daily May soybeans chart, the ZSK8, if you will, a daily bar. The daily bar is on top. That trend line is there. We settled above it. But look at the commodity channel index indicator. It is pointing towards the upside with a sum similar to a double-legged bottom. We expect that to continue higher, which usually will help a market go higher. The relative strength index pointing towards the upside in the proper direction. The WADX, or average directional movement indicator, the positive green pointing up, the negative red pointing down, another bullish indication. Stochastics, slow stochastics puts in a double-legged bottom and is running up towards the top, is nowhere near its overbought area, which would be all the way up here. It's got a long way to go, so soybeans likely has a long way to go looking at the indicators and the chart construction itself. I think soybeans will likely be bullish at least Sunday into Monday. We'll see what happens after that. We are day traders. Traders, we take it one day at a time. Okay, traders, so you've seen the charts. Traders, you see what I was showing you, especially on those longer charts? That average has been keeping this market in check above and below since they've met one another, and we are below it now. There are a lot of reasons why, technically, this market is still going to go lower. So unless, and I say unless, the market does turn and give us a lot of technical reasons why we should be bullish, I'm going to stick with my motto of don't fall in love with the upside. Again, yes, there could be a rally coming, but that doesn't mean it's coming. The charts are telling us that no matter what happens, there's a lot of work to be done on the downside unless these markets can prove themselves and really move up higher. And I don't know that that's the case, especially now that you see, if you go do your research, you'll see what I read in the papers, and that's a small article compared to the stuff that I've been looking at this week. You go read the papers and you'll see what I mean. The lenders are the next shoe to drop. Does anybody remember the old savings and loans crisis back in the 80s? That is coming our way now. The mandate by the Fed is that these loan companies have to raise cash to balance their books. And who's out there ready to raise money for these lenders? I don't want to put money with a lender. I don't know if anyone else does. I'm not trying to down talk any sector. I am not an economist, traders. I'm in front of you as a technical analyst. And the techniques that I've shown you are pointing towards the downside. Now, granted, you have that one bullish tendency, that head and shoulders bottom, that inverted head and shoulders that I showed you on that last chart. That's the only thing that's pointing towards a possible rally. And I've said this many times, I don't think inverted head and shoulders work very well in a bearish market. They serve better when you're in a bullish market and you come down and put one in, and that means you're going to go higher. When you're in a bearish market and you see those head and shoulders on the inverted side, many times they fail. Again, like that other chart I showed you with all the circles, how many times this exact formation we are in today has failed? I'm going to go with that until otherwise proven wrong. Traders, if you like the techniques that you've seen on these charts and the way we present them to you, please come on down to our site. It's www.livewithoscar.com and grab yourselves a membership. If you take out a membership, we start at free memberships and work our way up to the premium chat room where you are a platinum member. And if you open up a trading account with me, it makes you a VIP and gives you access to everything at the OMNI Trading Academy. We can teach these techniques to you, and we can teach you how to look at these charts. So come on down to the site. Grab a membership. Don't hesitate. We have an army of Omniacs down there. And hey, traders, am I right? You guys in the background, are they doing well? The people that have been with us, a round of applause for all you Omniacs out there, because I am so proud of the work you're doing. I'm proud of the analysis that you're presenting back to me. And I love the fact that when I hold my classes during the day, you're now beginning to answer the questions for me, which is fantastic. I'll put out a chart, and I'll put up some analysis techniques I've taught in the past, and a lot of Omniacs now are answering the questions that I ask correctly. That's a beautiful thing, because a lot of you, when you came to me, all you did was ask me questions, and the answers were one way. Now, the school is really starting to take its effect, and you traders, one more time, I'm really impressed with you students, so keep up the great work. Traders, if you like this video, we have a ton of other videos on YouTube right now. We have a YouTube presence, and there are 294 videos, a lot like this one you see, with a wealth of techniques to help you guide your way through these rough and tumble markets. When you get to our YouTube spot, subscribe to the videos, and then of course you can leave comments there, because I'll tell you what, traders, the comments help other traders around the world see what we're doing, and it brings people to our academy so we can help them, because we are all about helping the traders out there that need the help. That's why we started this, and that's what we're doing. We're really achieving our goal. And with that in mind, go to the YouTube spot. It's www.youtube.com/futuresanalysts, and go check out the rest of those videos. There's a ton of them out there for you. Traders, continue to send me in your email. I love the banter back and forth. The emails have been great. I've been answering every one of them. As you know, we always get to our emails. So shoot me in your homework. Let me see your analysis, and I'll write back to you an assessment of what I think of the work you've shown me. The email is oscar@futuresanalysts.com. Again, another way to contact us, because we're always here. If the moon is up, if the sun is up, if anything's happening, we're here manning our office. So give us a call. Don't be bashful anytime. It's 702-629-4755. Now, guys, everyone out here, the countdown to the Mandalay Bay show. We're doing another show in Vegas, and I can't wait, baby. We're doing the money show from May 12th through the 15th. May 12th is the setup day. The 13th and 14th and 15th, we will be there at the money show with a booth. I have 2 speaking appearances. Come on down to the money show, traders. Book your tickets now. Planes are leaving from every state constantly coming to Vegas. I know, we see them flying over the house 1,000,000 times a day. Grab one of those flights and come on down to the Mandalay Bay again, May 12th, 13th, 14th, and 15th. Come to the money show, traders. Come meet the staff in person, meet me in person. We'll get to know one another better, and it couldn't possibly hurt to know one another a little better, especially the way we interact at this site every day. So come on down to the Mandalay Bay, and I can't wait for that. Traders, you've been using the forums, I've noticed, at our site, and you've been leaving lots of questions and answering lots of questions, and that's really helping the army of Omniacs who can't be in the chat rooms during the day because they have jobs and professions. So when they show up at night, they get to read some of the things you're putting in the forums. So thank you so much for posting in those forums. Again, guys, clap for the traders. Keep those forums going for us. Again, you traders, you get 2 OMNI bucks for every post in the forums. So if you are posting in the forums, you get 2 OMNI bucks. When you get to 100, you can come to our technical analysis classes free of charge. Traders, we are out there to help you. We are not tripping you up and making you have to pay for everything you do at our site. You can show up for free. You can post in the forums or play OMNI slots that will give you OMNI bucks. And when you get up to 100, redeem them for free classes, traders. Those classes are extremely comprehensive and will help you figure out your technical analysis. All right, traders, guys, anything else I should mention? Of course, don't trade alone and never trade alone. Never trade alone, traders. Not when you have an army of people out here like we have at our site that can help you. So again, come to the site. It's www.livewithoscar.com. Don't trade alone. Trade with the crowd of us and let us help you. I am there on camera and microphone every day, all day. We're there at night. We are constantly there to help you traders get through these markets. All right, so I guess we're going to have to leave with the same thing we leave with every day, because I know it's helping by the feedback. A lot of you traders love saying it because it's helping you with your emotions, traders. So say it to yourselves every day over and over, and you know what that is. Stops are in. Emotions are out.
Futures trading is risky and can cause substantial financial loss. We do not claim or guarantee that you will profit from the information provided. That being said, I am a 24-year seasoned trader on and off the floors. This is how I've made my living for many, many years. Good luck trading.